I think for cyclical stocks, value stocks in particular, we're going to have a very bumpy few months and few years ahead of us. The reality is that masks and meters, as I call it, measures which are designed to make people feel safe and maybe we can open the economy at the same time, it actually puts a ceiling, it puts a brake on economic activity. Anything short of how we were before, February 2020 is going to be a shortfall versus full capacity. So we're basically running with an impaired economy, and every time we lock down, we see this in Florida again. They've reimposed lockdown. It's a disaster for the economy. So the stock market, I think, is reflecting this. Perhaps not in the overall levels, because we've seen obviously that Q2 was, I think, the best quarter since 1998. But it's certainly within the sector rotation underneath. You can really see value and cyclicality getting absolutely hammered. So I think that trend is likely to continue until we get a vaccine, which we basically let the virus rip. Unless you have those two scenarios, I think that the cyclical sectors in the market will reflect the immense damage being done to the economy.
We've also had a reminder of some of the vulnerabilities around idiosyncratic stories. And while Wirecard is a specific story related to potential fraud at this point, and we'll see how that unfolds, it does remind us of how limited the access for European investors is to the kind of technology stories that seem to have been driving US markets higher.
Yeah, and I think Wirecard, it's the tragedy of Wirecard is that it was one of those rare exceptions. I think there were only two really big tech firms in the DAX 30. With Wirecard effectively gone now, you're down to one. So Europe has basically become a kind of a euphemism for value and cyclicality again. So it's hard to see how the European market will thrive over time. Sure, there'll be days or weeks where things appear to get better, a few rebound points of data. Maybe some better news on the progress of the virus within Europe. That'll propel European equities for a few days or weeks. But the long run story for Europe is one of poor demographics, shrinking workforces, low productivity, and damaged economic growth. Given that Europe's business model is basically supplying to the world economy. It's a leveraged play on the world economy, and its stocks reflect that. So I think it's going to be tough for Europe, and I think the tragedy of that recent corporate scandal is that it provided a rare exception.